most of the major P&C companies here in attendance at PCI, the meeting also draws reinsurance buyers, brokers, and markets here to discuss upcoming renewals. We spoke with Lynn Halper, Head of Specialty Casualty for PartnerRe, about current market conditions, the challenges, and the opportunities.
My current observations of the US Specialty Casualty market are that it's a fairly dynamic market right now. There are issues around returns because of the interest rate environment. There's also been some emerging loss activity. Some of it's due to the recession. Some of it is due to just cyclical issues in the marketplace. Interest rates, while improving, still remain challenged at this point in time. And so there is a lot of pressure on returns. And because of the pressure on returns, companies have to do things to correct their writings in the specialty casualty market by increasing rates. The primary carriers have the same challenges as reinsurers have at the moment, only there is a tremendous abundance of capacity, acceptable capacity for the primary markets right now. And it is very difficult, obviously, to make corrections in the market as far as rate levels are concerned when you have such heavy competition. Maybe some of that competition will be weeded out over time, but right now it's there and it's in everybody's face, and you really need to be mindful of what your returns are rather than focusing on what your competition is doing. Some of the other challenges in the specialty casualty market include, as I've said before, there are some emerging areas of loss activity going on, particularly in the workers' compensation area, in the umbrella area, and as a result of the recession, D&O and employment practices, there's been a fair amount of loss activity as well. All of this is going on while companies are still releasing reserves from the better years, but the business that they're putting on the books today, they really need to address their loss ratios and bring them down in order to adjust to better returns. Reinsurers can help meet the challenges that primary carriers are facing. One of the ways is we can be your eyes and ears to the marketplace. An insurance company knows what's happening on each specific risk that they're doing, and also generally what's going on in the market, but we see a broad array of risks from a broad array of clients, and therefore we can give feedback on best practices, where people are getting better returns. We can also be a good capital provider. Capital modeling now has become part of everybody's way of managing risk as part of their enterprise risk management. And if companies are dedicating too much capital at the moment to casualty lines of business, that's exactly what reinsurers are there for, to relieve some of that capital pressure. The opportunities in the specialty casualty market are in a lot of different places at the moment. Specialty casualty is linked directly with what's happening in the economy. So as building revs up again, as it is, all reports indicate that, what is happening is it's better for the workers' compensation line because more people are going back to work and the premium volumes are growing. This actually is putting some pressure on capital in companies. The other thing that's happening is, if there's a better economy, then there's more revenue being produced by contractors and manufacturers, then there's more need for insurance at that point, so this is driving premium volumes up as well. There's also some emerging areas of risk as well. Cyber liability seems to be making the front page of papers every day. There are cyber liability products out there that more and more companies are introducing, and that is creating more and more opportunities for the insurance market in general, and therefore for reinsurers who are there to support these companies as they get into these new businesses. PartnerRe has the expertise from the underwriters and claims people that work in our organization, also great actuarial support. We can give you great feedback on not only the businesses that you're in, but the businesses that you're going into. You should think of PartnerRe as a capital provider as well. Instead of issuing bonds or taking out loans, insurance carriers can come to PartnerRe if they're capital constrained. We welcome the opportunity to have a discussion with any of the carriers in the marketplace, and we think we could provide great support for you as you move forward with your business plan.